enjoyed these questions, and we will be back to
Oh, yeah. Uh-huh.
Could you guys speak on the transaction process, the ASR, IIS?
Okay, let's unpack this. You are ready to look under the hood of the whole system.
What is fascinating here is that everything in an information system starts with a transaction.
But it is not always just about money changing hands, right?
Exactly. We actually split transactions into two main classes, financial and non-financial.
So a financial transaction is the one that actually hits the company's accounts.
Precisely. It is an economic event that affects the assets and equities of the organization.
And the non-financial ones, are those just everything else that happens?
Pretty much.
Oh, yeah. Go on.
So, like the transaction processing system, TPS.
Yes, the transaction processing system, or TPS, is really the heart of the whole operation.
Okay, let's unpack this. So the TPS is specifically for those financial events, right?
Exactly. It handles the daily business events that change the organization's assets or equities.
Here is where it gets really interesting. It actually feeds into the bigger financial reporting systems.
Right. It captures the raw data before it ever hits the general ledger or financial statements.
So if the TPS is the heart, it's pumping the data everywhere else.
That is a great way to put it. It keeps the accounting information system alive.
But wait, didn't we mention non-financial stuff too, like adding a new supplier?
Precisely, that is where the Management Information System, or MIS, takes over the wheel.
So the system tracks the supplier, but it doesn't change the bank balance yet.
Not until a financial transaction occurs, like actually buying something from that new vendor.
Okay, so how does this data actually move once the TPS grabs it?
It follows a path from data sources through processing and management to final generation.
So it starts as a raw event and ends up as a report.
Right. And while it is moving, it lives in different types of digital files.
Oh, like those transaction files and master files we were talking about earlier.
Exactly. Think of a transaction file as a temporary record, like an individual sales order.
And that temporary record is used to update the master file, which is more permanent.
You nailed it. It is like a temporary sticky note updating a giant permanent ledger.
This structured flow is exactly what lets those auditors we discussed follow the trail.
It really is. Without that organized path, there would be no audit trail to verify it.
It all circles back.
Oh, yeah, uh-huh.
Okay, can you guys slow it down? Well, so like you have the TPS.
Oh, yeah, uh-huh.
Like there's the TPS, and it's made up of three cycles.
Ah, yeah, uh-huh.
It's made up of three cycles.
You've got it exactly right. Those TPS transactions aren't just random events.
Okay, let's unpack this because cycles is the magic word here.
Most business activity flows through three primary transaction cycles: revenue, expenditure, and conversion.
So the TPS is actually organized into these recurring loops.
Precisely. The expenditure cycle handles things like buying inventory and paying employees.
And the
Oh, go for it.
And like the cash is coming from the customers, which is taken in by the revenue cycle and then distributed back to the expenditure cycle, which is then used to purchase material, pay for labor,
Yep, go on.
payroll, factory overhead, manufacturing overhead.
You are thinking exactly about how labor costs flow into the production process.
Okay, let's unpack those terms because they are the bridge between cycles.
Payroll is technically a special case expenditure cycle, but it feeds the conversion cycle.
Right, because you need labor to actually make the stuff.
When we talk about factory overhead, we often mean indirect labor.
Like the supervisor's salary instead of the person on the assembly line.
Precisely. The cost accounting system monitors that flow of overhead and raw materials.
And then you have the conversion cycle, which is where the company actually makes the product.
It takes those raw materials and labor costs and turns them into finished goods.
It is like a recipe where labor and overhead are the heat that cooks the ingredients.
What is fascinating is how the labor distribution summary tracks all that for the general ledger.
So the payroll system pays the people, but the conversion cycle tracks their work.
Exactly. It all integrates to show exactly what it costs to build that inventory.
We have really mapped out the whole machine today from cash to...
Hey, yeah, what's up?
So like the revenue cycle would also have accounts receivable as well, most likely, right?
You're spot on, and that's actually a huge part of the revenue cycle's financial phase.
Okay, let's unpack this because accounts receivable is basically the bridge between shipping and getting paid.
Exactly, because most business sales are made on credit rather than immediate cash.
So when a company ships those finished goods we mentioned, they record the sale in accounts receivable.
What's fascinating here is that the revenue cycle is split into two subsystems to manage this.
Right, you have the sales order processing first, which is where the debt is actually born.
Then the cash receipts subsystem follows up later to collect that money and clear the receivable.
Here's where it gets really interesting for the accounting records.
The system updates individual customer records in an accounts receivable subsidiary ledger.
While the general ledger keeps the big picture in the control account,
It's all about tracking that time lag between the physical transfer and the actual payment,
this keeps the whole machine moving from the raw materials in the conversion cycle.
but all the way through to the final products and the cash coming back in.
It has been a real pleasure exploring these interconnection gears with you. Oh, back to our listener. What's up?
So like these two major subsystems for the conversion,
Oh, go for it.
like the production system and the cost accounting system. Could you speak on that a little?
You nailed it. Those are the two main pillars that keep the conversion cycle standing.
Okay, let's unpack this. The production system is really about the physical movement, right?
Exactly. It handles the planning, scheduling, and control of the product through the manufacturing process.
So it is deciding how many raw materials to release and moving that work in process along.
Precisely. It is the physical heart of making whatever the company sells.
And then the cost accounting system is like the brain tracking the money behind it.
That is a great way to put it. It monitors labor, overhead, and raw material costs.
Here is where it gets really interesting for the managers.
It provides the data for inventory valuation and even helps with make or buy decisions.
So it tells you if it's actually cheaper to build the part or just buy it.
Exactly. It turns those physical factory actions into meaningful financial reports.
It is incredible how these gears interlock to show the true cost of doing business.
Your questions really helped us map out the entire flow from labor to finished product. Oh yeah, let's hear it.
So what is the flowcharting technique for documenting this information?
Oh, that is the perfect follow-up. You want to know how we actually map out this entire maze.
It is called system flow charting, and it is the primary graphical representation of how a system works.
Okay, let's unpack this. It is basically like a treasure map, but for data and documents, right?
Exactly. It shows the physical relationships between the key elements, like departments, files, and processes.
So if I'm looking at one of these charts, how is it actually laid out?
Usually, we use vertical columns to represent different areas of activity or departments.
Like a column for the warehouse and another for the accounting department.
Precisely. We use lines of demarcation to separate those different physical areas.
Here's where it gets really interesting. Do we use different shapes for different things?
We do. For manual activities, you might see a trapezoid for an operation or an inverted triangle for files.
And what about the digital side? I bet the symbols change when computers get involved.
They certainly do. You will see cylinders for direct access storage or rectangles for computer processes.
So it is a way to transcribe written facts into a visual format that anyone can understand.
Exactly. But for visual clarity, a single flowchart usually only shows the process.
Oh yeah, let's hear it.
Like what are these shapes? Like what are these?
That makes so much sense. You are asking about the specific symbols we use.
Yes, each shape is like a specialized vocabulary word for the system's map.
Okay, let's unpack these. What is that rectangle with the wavy bottom?
That represents a source document or a report, like a paper invoice.
And I saw an inverted triangle earlier. Is that a warning sign?
Not at all. That is just a file where documents are stored manually.
I also see a parallelogram. Is that for the actual record books?
Exactly. Those represent accounting records like journals, registers, or ledgers.
What about the digital side? I see a cylinder shape.
That represents a direct access storage device, like a modern disk pack.
And that zigzag lightning bolt. Oh, yeah. Uh-huh.
So like this flowchart, which I don't have an example of.
It sounds like you were really starting to visualize how these flowcharts pull everything together.
It is the ultimate tool for transparency because it translates complex logic into a simple picture.
So we were just about to look at that zigzag lightning bolt line.
That is a great one. It represents a real-time online connection between different parts of the system.
Like when you swipe a card and the bank approves it instantly?
Exactly. It shows that data is moving through the network without any manual delay.
And what about that weird home plate shape? It looks like a little house.
That is an off-page connector. It means the process continues onto a different sheet.
Oh, that makes sense. Otherwise, these maps would be the size of a wallpaper.
Precisely. We also use small circles as on-page connectors to keep the flow neat.
So it prevents that giant bowl of spaghetti we were joking about earlier.
It really does. Using these specific shapes helps us spot gaps in internal controls.
Here is where it gets really interesting. It is basically the auditor's best friend.
It truly is. It allows them to trace a transaction from the source.
Oh, yeah. Go on.
So like a really big part about the flowcharting system is to represent storage. But then there's like different types of storage.
Oh, yeah, uh-huh.
Like there's different types of digital data and storage, like the master file, transaction reference files, file structure. Um,
You're jumping exactly where the logic leads. Digital storage is the foundation of those flowcharts.
Okay, let's unpack this because not all digital files are created equal.
Think of a master file as the permanent record, like your main bank balance.
So that's where the general ledger lives, right? It stays.
Oh, yeah, uh-huh.
so like the reference file, why is that different from the master file?
Okay, let's unpack the reference file since you brought it up.
What's fascinating here is that reference files are like the system's brainy sidekick.
So it's not a record of what happened, but a guide for how to process it.
Exactly. It stores data that act as standards for processing all those transactions.
Here's where it gets really interesting for things like your paycheck.
Right. A payroll program looks at a tax table in a reference file to calculate withholdings.
So it's like the system checking a price list to make sure an invoice is right.
Precisely. Other examples include authorized supplier lists or customer credit histories.
That makes so much sense. It keeps everything consistent without retyping everything.
Exactly. Now, to change those permanent balances we mentioned, you need a transaction file.
Right, like that temporary digital sticky note that says, I spent money today.
Precisely. It is a temporary record used to update the data in the master file.
Ah, yeah, uh-huh.
So like what's the difference between batch and real-time processing?
That is a fundamental distinction in how information systems actually function.
Okay, let's unpack this with a simple analogy, shall we?
Think of batch processing, like doing your laundry once a week.
You wait until you have a full basket before you start the machine.
Exactly, while real-time processing is like washing a single dish the moment it gets dirty.
So with batching, there's always a bit of a time lag, right?
Precisely. The lag could be minutes or even weeks, depending on the schedule.
Like we mentioned with payroll earlier, that is almost always a batch process.
It is more efficient for the computer because it handles everything all at once.
But real-time systems update the records the very second the event happens.
Right, there is no time lag, which is essential for things like checking account balances.
Here is where it gets really interesting for the tech side of things.
Real-time systems are much more expensive to design because the interface must be user-friendly.
But batching saves money on computer time and programming costs.
Regardless of the speed, both methods eventually update the data in the master file.
So the transaction file is the doing and the reference file is the ruling.
That is a great way to put it. They work together to update the master file.
So how are all these files actually structured inside the computer?